Are you wondering how to pay taxes as a single member LLC? Well, stick with me because today I'm going to talk to you about the 4 different ways that you can be taxed as a single member LLC. Let's do this. Are you looking for legal guidance and practical legal tips without spending thousands of dollars on a high-priced law firm? Hi, my name is Jim Hart. I'm the founding attorney here at Hawthorne Law. We help online entrepreneurs and small business owners to protect their businesses without spending a small fortune in both time and money so that you can focus your attention and your talents on what you do best, and that's building something that truly matters in the world. So if you are interested in building your business the right way, then go ahead and click the subscribe button right down here, and don't forget to click on that little bell thingy so that you can notify whenever we post new videos. So today I want to talk to you about everybody's favorite topic, and that is taxes. I shouldn't do that. It's going to make me tired for the rest of this video. I don't know why I do that. If you own a single member LLC, did you actually know that you have 4 different options when it comes to paying taxes? A lot of people think that a single member LLC gets taxed in its own way. Actually, one of the main benefits of an LLC is that you can choose the way that you want to be taxed. You don't have to just get taxed in one way. And so that's what I'm going to share with you here today. Not only do you have a choice in how you can be taxed as a single member LLC, but were you also aware that if you do this the wrong way, it can actually cost you literally thousands of dollars? So if you do this the right way, it doesn't cost that much. If you do this the wrong way, big problems. So by the end of today's video, I'm going to share with you the 4 different options that you have available to you, the 4 different elections rather, that you can give to the IRS to tell them how you want to be taxed with your single member LLC. So let me just start by saying that an LLC is just that, it is an LLC. That stands for Limited Liability Company. LLCs were started way back in the 1970s in Wyoming of all places in response to the strict rules, regulations, and bureaucracy of water break today. Anyway, what was I saying? LLCs were formed in response to the rules, the formalities, the bureaucracy, everything that came along with the corporate environment and forming corporations. That's what Wyoming did. They said, we're going to create this other creature called an LLC, and that has become the gold standard for what most people use in their online businesses today. But the main problem with LLCs back in the day, which lasted until somewhere in the mid-90s, is that the IRS didn't really know what to do with them. They didn't really know how to tax an LLC. But then in the 1990s, the IRS finally said, you know what, we've looked at this, we've thought about this, and what we've decided is, you decide, you tell us how you want to be taxed. So what that means is, if you want your LLC to be taxed as a sole proprietorship, let's say, then you can elect to be taxed as a sole proprietorship. If you want to be taxed as a C corporation, you can elect to be taxed as a C corporation. It's completely up to you. So here are the 4 main options, and then we're going to kind of go through them one by one in terms of how you can be taxed with your LLC. First is the sole proprietorship. Second is a partnership. Third is an S corporation. And 4th is a C corporation. Okay. Let's go through those one by one. Number 1, a sole proprietorship. This is the default. So if it is you and you have formed a single member LLC and it is just you, this is how you're going to be taxed if you do nothing else. When you go to file your paperwork with the IRS, you're going to file a Schedule C that's going to get attached to your 1040, and it's going to list all the income and expenses related to your business, and you're going to be taxed as a sole proprietorship. What that means is that you're going to pay 15.3% self-employment tax. And if you want to know what self-employment tax is, it's kind of like, so when you work at a job and you get a paycheck and you see FICA taxes come out, that is the equivalent of the self-employment tax when you are the owner member of a single member LLC. That's what that is. Half of that 15.3% is passed on to the employee and half of it goes to the company. You only see half of it when you're an employee. But when you own the entire LLC, that whole 15.3% is what gets passed on to you as the employee and you as the owner. Does that make sense? I hope so. Comment below and let me know if I've just lost you or you're with me here so far. Second option is partnership. Now, if you have a single member LLC, this is not really an option. This is really an option for people who have a multi-member LLC, and actually the video I'm going to do next week is going to be all about how to pay yourself with a multi-member LLC, because that's a question I get quite frequently from people. If you have a multi-member LLC, the default is going to be a partnership. And when you have a partnership, you're going to have to file a separate tax return that's called an information return with the IRS. You're still going to get taxed as a sole proprietorship, but the net profits from the partnership are going to get split between the partners, and each one of you will have to include that information on your personal tax return, and you're still going to get taxed at the 15.3% self-employment tax. All right, option number 3 is the S corporation. My typical advice for people when they're just starting out is you do not need to form an S corporation yet, because you need to actually be making money to make it worthwhile. So typically, you're going to need to be making net from your business, that's profit minus losses, of between $35,000 and $50,000 to really make the S corporation worthwhile. And the reason for that is you're going to need to pay yourself a reasonable salary when you're an S corporation, and you're going to get taxed on that. And then you're going to get taxed a marginal tax rate on anything above your reasonable salary. So you need to be making above $35,000 to $50,000, because typically a reasonable salary for most online businesses is going to be at least $35,000 to $50,000. If you're not paying yourself that much, you're probably underpaying yourself with your LLC. So you need to be making that much to pay yourself that much, and then you need to pay yourself that much to comply with the rules for paying yourself a reasonable salary for your S corporation. Does that make, every time I talk about taxes, I know that it's so confusing. I mean, it's not confusing for me, but it's confusing to explain it. And I know some of you are gonna come out in the comments and be like, get a whiteboard, start putting it up on the whiteboard. I'll get there, I promise. So what's the bottom line? The S corporation, if you're netting between $35,000 and $50,000, then you might want to think about electing to be taxed as an S corporation. The next option is a C corporation. So if you decide that you want to be taxed as a C corporation, which most people don't, that's an entirely separate set of rules that you're going to need to follow. You're going to file an entirely separate tax return, which you also are going to have to do with an S corporation. And the C corporation is going to pay its own taxes, and then you're going to pay taxes on the money that you receive from the C corporation in terms of dividends and salary and different things like that. So there's all sorts of different ways you can get paid. Anyway, those are the 4 options that you can elect from the IRS to be taxed with your LLC. I hope that makes sense. I've also written a short 1-page recap of all these options. There's going to be a link down below in the comments. You can go ahead and sign up for that if that's something you'd like to get. So one more time, the options are sole proprietorship, that's the default. Partnership, that's the default if you've got partners. S corporation, that's what you should elect if you're making between $35,000 and $50,000 net per year. C corporation, the only people that really need to do that are foreigners and people that have visions of grandeur who are going to have a company that spans the globe. That's oversimplifying that. And that's not really true, but anyway. So this is the second in a series of videos that I'm doing about the inner workings of an LLC and how it operates once you've gotten it formed. If you'd like to see the whole series, go ahead and click right here. I'm going to leave a link to the series there, to the playlist. And please don't forget to give us a thumbs up and subscribe, and click the little bell thing if you are so inclined. Anyway, there's a link to subscribe. Have a great day, folks. We'll see you next week. Take care.